How do we create the best Forex price action trading plans and everything else you need to know about organizing and managing your trades? So hello, welcome back, and this is a video I tried or I wanted to do for quite a long time, and now that we have had a new month, so it's just the 7th of August, so we have just one trading week in, and I thought this is a good time to create top-down trading plans. And what I will focus on is I will show you how to do that on the higher time frames. So you can see here we are on the monthly chart and here we are on the weekly chart. And I would like to take a look at those longer term time frames and show you how to create the best Forex price action plans and what is actually necessary. So what I usually do in my trading is I start this on the weekly time frame or on the daily time frame, and then I go down to the lower time frames because I usually mostly trade anything between the 15-minute and the 4-hour time frame. So I usually start at the daily and then go down, but we can also do this with the monthly. And what we want to find out is, where are we on this spectrum? Are we in a very bullish market, in a normally bullish market? Is the trend coming, or was the trend bullish and it's now exhausting, which means it's losing strength? Or is it a neutral market? Or are we on a very bearish trend? Are we on a slightly bearish trend? Is the bearish trend exhausting, or is this entering a neutral market? And it's important to understand also where we are coming from. Are we coming from a very strong trend and then maybe move right on the spectrum, or is the market just breaking out of a neutral phase and then it is probably not going from neutral to exhausting, but neutral, bearish, and very bearish? So we need to know, where are we on the spectrum, and are we coming from the right side, a new trend is starting, or are we coming from the left side, that an existing trend is slowing down or maybe even still strong? And for that I use one moving average. As you can see here, this is the 50-period moving average. I use TradingView, by the way, for my chart analysis. Absolutely love them. And this is how I organize myself. I usually have a split screen, left and right, higher time frame, lower time frame, and then here on the right hand side you'll see all the symbols that I want to go through. So get a coffee, get a drink, and this video will probably take a while. So let's get into this. So when we start here, what I look for is, well, how strong is the trend? Is it a strong trend? Is it a trend with very large candles? Are the candles increasing in size, which could mean that the trend is increasing? And also, where is it in relation to the 50-period moving average, which is a very important piece of the puzzle? Is it far away like it was here? You can see very far, with a very wide and great distance to the moving average, which means that, or which can mean that the market is more of an overextended area, especially when we see signs of exhaustion. Or is the market right at the 50 moving average? This could help us as well. So whenever I see that the market is just reaching the moving average, I usually wait out to see what is actually going to happen. And there are obviously a few things that can happen. First is the market will just break out, and it's currently still in a strong trend. You can see 1, 2, 3, and this candle, by the way, is just forming because it's just the first week. We have 1, 2, 3, 4 candles, 4 consecutive bullish candles, which when we look through our charts, this usually rarely ever happens. We have here one sequence, 1, 2, 3, 4, 4, 5 consecutive candles, but it's very, very rare. You can see every now and then it does happen, but 1, 2, 3, 4, 5, 6 over here. It's very, very rare. So the longer and the more consecutive candles, the higher the likelihood of something else happening in especially in Forex, which is a mean reverting market. Very important to understand. So where are we now in the spectrum? You can see that we are right at the moving average. Currently we are moving higher. However, this candle is very, very far away from closing actually. A lot of things can happen. So what I would like to see is either a retest or a rejection, something like what has happened here, which can be then used for a short bias. Or is the market actually closing above the level? Then my bias will shift towards a more bullish sentiment. However, a close above the moving average, and you can see this would mark then the 5th consecutive a green candle, which makes then a pullback more likely. So what you then probably want to wait for is a pullback back into the moving average, and then you look for retest opportunities, for example here on the lower time frames. And although this is the monthly time frame, you can use the exact same approach on the daily time frame or on any other time frame to help you just navigate through the price action and to just establish a general sense of where the market is currently at and what can happen. And this is how usually traders should approach their charts, with a top-down approach and with trading plans. Every trade that you take should be like an if-then scenario. If this happens, then I will do that. And you outline and you think about this in advance. So what can happen here, and what are you going to do if and when this happens? And then you just you can write it down, you can write it directly on your charts, or however you want to organize yourself. And then I just go simply through the list. I look for a support and resistance levels. So the Aussie Swiss, can see it's under the moving average. You can see it's right at a previous, seems to be an important support area here and here. And now it seems like it's turning, at least in the past, it has acted as some type of resistance here 2 months ago. Last month, very small candle, so an inside candle, which means that the market is currently undecided. So probably on the lower time frames, this is not going to give us any good trending options or any good price action, because last month's candle is very slow, and thus when you go to a lower time frame, it will probably be a lot of range and not, you can see here the last month the price action was completely sideways, nothing happened. So definitely not a market that I would be very interested in trading right now. Either you want to see a follow through after the inside bar, you want to see that this candle here, the currently forming candle, is giving you a breakout out of the inside bar, to just break out of the range that we are seeing on the lower time frames. Or you want to see a clear move above this support level, which is now looking like it could become resistance, and then maybe you move back to the moving average to complete the mean reverting characteristic in Forex, because this is a real thing. Forex markets, when you do analysis and when you do some algos, algo trading or algo testing, algo development, you're usually looking for mean reverting market on Forex, which means that the market is fluctuating around the mean. It's not super trendy, especially long term. The market generally tends to return to the mean, which is an important characteristic. And this is where this medium term moving average comes in handy. And you can see I would first make my way through the Aussies, through the Aussie pair, so that I have a general idea of what I'm looking for on the Aussies. Are they really tradable this month, or is there nothing here really? So here you can see this is not really a good level, at least here, because it's not respected. Whenever you see the market is really piercing through the support and resistance levels with such a huge wick, I don't usually like those levels. But here you can see the last swing high coincides with a level that has been used now for the past 2 candles. You can see here, good rejection, here, nice rejection. And for now, again, very small candles, so contracting price action. We have 1, 2, 3, 4, and now the 5th consecutive potentially candle. So we are just currently rebouncing from here this pullback. But I typically don't like to enter in such a market that it's not at the origin of a new trend. So this is probably after this spike candle. This is probably where you would look for something in a more of a bullish bias, because you are very overextended, or the price action rather, you're very far away from the moving average. You have a very good spike here, which shows another form of rejection. You're very close, or you're actually poking into this demand area, which is a very, very important level. So this is usually what I like to look at, origins of new trends. I don't like to take trades, at least not into the trend direction, when you're looking at a mature market. So I would either like to see a pullback here of the previous highs maybe, or a continuation on the break, and then maybe look for a pullback at those areas. So this is what how I would classify and look at my charts. Let's take a look at a few other ones to see, is there anything currently that is worth really exploring? So maybe here Eurocad looks quite interesting. I always like when the market is entering such spiky zones. So you can see clearly this is a level where we have seen volatile reactions in the past. So the 160 round number seems to be here a level that is causing some issues here at times. You can see it moved away here, it moved away here. Less and less so though. You can see every time the market reached into the area, the sell-off then was shorter. So this is interesting to see how is the market going to react going forward. There could be an option for a very quick short opportunity here on the way on the lower time frames. If you think and if you are looking for a rejection based on the 160, or you can see that because the market is currently slowly moving higher, you could also, if you have watched my lower bounce videos, then this is also could lead to a breakout build-up. So if the market closes above 160, maybe go to the lower time frames, and whatever strategy you're using, try to pinpoint something. Then we have markets like this where absolutely there's currently nothing too interesting at. It's a low volatility market most of the time. Here you can see the market overshot the previous lows. Then here you have the deceleration in play, very strong candles, then slowly fade. Then you have your engulfing candle here on the next candle, so huge strong bullish input. And then you can see the next candle, even though it closed red, you could have probably used this as a very nice long opportunity on the lower time frames, based on deceleration, based on engulfing candles. And now you can see the new trend seems to be on its way. So very strong bullish candle here on the last month, and currently we are just forming this candle. And right now there seems to be a small intermediate level, not a huge level, I would say, small support, a little bit of a reaction, but not a strong reaction. You can see the market quickly bounced back. So on the break into new highs, maybe the monthly 50, and we can also take a look at you can see on the weekly, actually even more interesting. Here the market is just performing a very important trend change, potential trend change behavior. You can see it's currently battling with the 50 MA, not a clean break. We had a clean break here, got rejected, and now maybe a second approach or maybe a second try. So let's see. Here you can see on the first try it didn't work out. The next try here was a little bit dirty, where the price crossed all the way back into the other side, and then it sold off. But every time when you see a long-term moving average being breached, especially after such a long trending period, this is where I always have my eyes at those charts. And then you can see we can just go. This is quite interesting. Here we have a long-term moving average. This is just being tested. And you can see, by the way, this is a good example for what was that here. So I talked about wicks, about candlestick wicks in the past, and I made a video and a blog post as well. The video will be somewhere, I think here, so make sure to check the link, where I said that, and I believe that many traders are too scared of wicks. They always believe that as soon as a wick is coming in, the market will jump into the opposite direction. And I don't think this is necessarily true from my own observations. What I have found very often, obviously it depends a little bit on when the candlestick and when the context of the wick. Are you in a trend? Are you at a support and resistance level? What is the trend stage? It depends a little bit on the context, but generally what I've seen is that very often the market will actually cover the wick going forward, or not fully, but at least to some degree. So I would really suggest that you pay attention to that. Don't be scared of wicks. Don't let wicks scare you out of your trades right away, but try to observe this feature. So here, for example, many traders who are looking at a potential long after this engulfing candle probably were scared after this pin bar, but I often see that this can actually foreshadow a move into the direction of the pin bar. And you can see it many, many times here as well. I think I've seen it a few other times. Where was I just? Here, for example, yeah, you can see it very nicely. Obviously, there's always an exception to the rule, but you can see very big spikes, but eventually the market covered it. Very big spike here, the market covered it. Obviously not all the time like it did here. It didn't cover the wick, but this is something that you can see here as well. I would just recommend not to be too scared or intimidated by wicks when you see them. Wicks are not essentially like such a strong signal, especially not a reversal signal, but overall I think traders put too much emphasis into wicks. So what do we have here? We have a strong trend that is currently going on. 1, 2, 3 confirmed bullish candles. Very big engulfing candle here at the previous double bottom. A very, very important candlestick feature here. We talked about this on a previous fake out video. Then we have the break of the moving average here on the last candle, and if the market can stay above the moving average for this month, then there's a good chance, I think, that we'll see a longer term trend change. Those, especially on the higher time frames, those are often very, very important moments when such a long-term moving average is broken. So you can see here, you can see we have actually a very big rejection wick which didn't get covered, and obviously nothing in trading works 100% of the time, so you need to take that into consideration. It's always about cutting your losses, letting your winning trades run, and then you don't need to worry about having a 100% win rate. That's really, really important. Let's take a look at the euro US dollar. On the monthly chart, you can see, oops. I think this is something that many traders are currently talking about. We have this trend line here, which seems to be broken. You can see, can we get a trend line in here? Yeah, so it seems like the market just broke a longer term trend line. However, it's very early to tell. Obviously, this month, this candle hasn't moved at all. Or a lot at least, so I would be a little bit cautious. It is summer period now, so we might have lighter summer trading, but what I always love to see is a pullback into those moving averages. Obviously, when it comes to pullbacks, when you wait for them, sometimes they will just not happen, and you have to be okay with that if you're a pullback trader. So yeah, after such a strong move, I would always be a little bit more cautious to look for follow-through moves into the direction of the candle. There's always a chance for a little bit of a pullback. So this is what I would think here. I haven't prepared any really, so we can just skip through them. So here, for example, very interesting development right at the daily 50, or the monthly 50 actually. We bounced here now for 2 months. You can see here 2 months, last month, and now the market is just here. So what I would probably look for, yeah, you can see very nice pattern here on the daily time frame. So if this level holds, if the daily 50 holds, and if you see a move away from this level, then looking for bullish opportunities would probably be here my preferred scenario. You can see on the weekly we have a very overextended trend, so we have a very overextended downtrend. Then here you have the concept of deceleration. Candles are getting smaller. We have more bullish candles and smaller bearish candles, so clearly deceleration is coming in here. And then you can see the last week pretty strong bullish candle, and here rejection candle with a failed breakout. So very interesting how this is all stacking up. So now we just have to wait it out. As I said, I would wait for the market to continue to make a push into the new high. If you're looking for longs, and if you see, let's get rid of all this. If you see that the market is actually breaking below the monthly 50, then my bias would switch to a short. And what this means is in my trade planning is that I have this zone. So right now, this is where the market is obviously, and this is the level that we got on the higher time frames as well. So I would classify this, whoops, not this one. I would classify this as a neutral market phase or neutral market zone, neutral. And as long as the market is in this zone, I have a neutral bias. I am not long, I'm not short biased. But as soon as the market makes either a breakout, or if you see that the pullback here in the daily 50 is holding, my bias would change slightly to bullish. And if it breaks out to the downside, my bias would change slightly to more bearish. So this is how you can approach your charts and just set a general direction of where you think you have a higher odds. So let's try to see, do we have anything else worth mentioning that is just at an interesting point right now? US dollar yen, I think many people are watching this level here right now. You can see we are entering this, or not, we are entering, we have established this triangle-ish pattern with a very strong support at 105. So if 105 breaks, I think there's a good chance we may see a more bearishness. However, you can see we have had a very, very strong bearish 3 months here prior, and the US dollar yen barely showed any bearishness at all. Yeah, you can see it's not the smallest bearish candle, but compared to the dollar index, it's not really that big, which means that the yen is holding very nicely against it. So as long as the yen is holding against it, you will not have a big reaction here. But yeah, if something changes, then this could move a lot. Let's try to see, do we have anything else? Okay, we have a few pairs that are actually like the US dollar Swedish krona that have just broken below the moving average here on the monthly. So what would be really interesting is to look for pullback options into the monthly 50. So this might be actually something to explore when the market, or if the market gets back to 9, which is the round number, which is interesting. Very often those big levels, they fall into those round numbers. Yeah, so this might be actually something to further explore. So this is the level on the monthly 50, a little bit far away from the weekly 50. That's okay, we'll see. But yeah, this is something that I would be quite interested in trading. Is there any US dollar bullish setup? This is not too bad. Let's try to find something. The reason is why I would like to see a bullish setup, because if the US dollar index shorts don't continue, I would like to see a way to capitalize on a move back into the highs. So if I see the momentum is fading here, I would like to see what would be the best pair to play a US dollar long. And the best pairs are usually either the ones that are very far below the moving average, so you can play the pullback, or right at the moving average, which could then help us to trade a bounce. So maybe this is not the worst. You can see the market has been in a, yeah, 1, 2, yeah, this is green obviously, but 1, 2, 3 months downtrend. Not the strongest, not the most oversold market, but it's at an interesting area. But I don't think we have anything better. We could play maybe if the US dollar yen doesn't find enough support to break this level, and if this actually stays support, we could look for buying opportunities in the triangle. And keep in mind, this is a very high time frame. So if you go to a lower time frame, you will have a lot of more space to try to trade it back into the highs, but this doesn't look like it. So yeah, this is a very quick introduction in how you could establish a higher time frame screening process. Well, gold is doing its thing here, unstoppable. And we have 1, 2, 3, 4, 5. Well, this one is in the making, but we have currently 5 consecutive bullish bars. Obviously, gold is a commodity and not a forex pair. Well, but the mean reverting concept of forex doesn't apply really here, because you can see that the market is trending quite a bit. It's not like forex, where most of the pairs are just, yeah, like here it's just floating or developing around the mean. You can see there's a lot more back and forth on the pairs as well. There are periods where you have trends, but in general you can see there are a lot of more of a range behavior for most, not for all. But when you look at commodities, for example, you will often see those macro trends. So the mean reverting characteristic is not as present in commodities as it is in forex. So here I would always warn from looking at pullbacks too early. Don't think because it has gone up for that long it must go down. Eventually it may go down, but this is not enough to formulate a good trading plan that has a long-term edge. So catching the falling knife should be absolutely avoid it at all costs because it's really, really bad habit. So here on gold, I would definitely wait to see some type of exhaustion. It could be a pin bar, it could be a 2-candle engulfing pattern before I do anything. And you can see on the lower time frames, there's just no sign of slowing down. So yeah, don't try to call a top before it does put in the top, or at least before the momentum fades. Don't try to call a top. Every now and then you will get out lucky, but eventually this big loss will come around. That just then takes out your trading account. So I think this is it for this video. Top-down approach. What I look for is where are we on the trend spectrum, strong trends to medium trends, exhausting trends, a neutral market, and then I look for ideas, okay, what would make sense to see here, what would help me establish a bias for looking for long shorts or whatever, and then bringing it down to your execution time frame, where you then look for only trading opportunities into that direction. Let me know if this helps. If you want to know more about those types of videos or concepts, let me know in the comments below, and you will hear from me very shortly. Bye bye and take care.